Our first speaker is Ms. Vanessa Colella, joining us from the US Silicon Valley.
Thank you so much.
Welcome, Vanessa.
Thank you, Mr. Kwok. I really appreciate the invitation.
Yeah, thank you very much for taking the time to share your insights with us. Vanessa is Citi's Chief Innovation Officer, and she leads the Citi Ventures and Citi Productivity teams. Apart from her experience in venture investment, Vanessa has a background in marketing for consumer banking in North America for Citi, consumer data strategy for Yahoo, and consultancy for McKinsey. Vanessa, I understand that you will take us through Citi's strategies in investing in solutions and technologies critical to the future success of the industry, and how these investments work in tandem with your bank's mission of enabling growth and progress for the society. But before I pass the floor to Vanessa, I want to encourage everybody to type your questions in the Q&A box on the right-hand side of your screen. You could also vote for the questions you like most raised by other participants. The questions with the most votes will float to the top, and if time permits, we could pick some of these questions for discussion during the Q&A session. Now, over to you, Vanessa.
Thank you, Mr. Kwok. Thank you for the invitation to AoF. We're really excited to be here today for this webinar. I think one of the things that we wanted to focus on this morning was really not just the fintech landscape, which is obviously incredibly important in how banks need to work together with fintechs, but also perhaps a little bit of the process of what we do at Citi, how we've been able to integrate innovation and digitization within the work that we do at the bank. And so I will speak perhaps for 25 minutes or so. And as you said in your introduction, thank you. I would be more than delighted to take audience questions and make this as interactive so it's as helpful for all of you as possible. But first, I thought I'd step back and just think about, we've been through 18 months of an incredible amount of change. And yet, I think we remain very optimistic in this current environment about how it is that financial services institutions can continue to help really rebuild communities. And I think that's especially important because prior to the pandemic, I think financial services was an industry that in many ways was behind other industries in terms of moving to digitization, in terms of adoption of some new technologies. And we've really seen that change, and a lot of trends that I'm going to talk about this morning accelerate quite a bit. Here at Citi, as I'm Chief Innovation Officer, I think a lot about how can we work together with our businesses to accelerate innovation, to accelerate growth. And a lot of that is about bringing ideas as well as companies from the outside in, and also really trying to adopt different sorts of ideas from other industries and see how we can bring those to bear for financial services. Before 2020, I used to spend a lot of time talking about the fact that we focus on really three types of change at Citi. I think technological change gets a lot of top billing, right? People talk about technology all the time and how technology is really changing the face of many industries. But there are two other types of change that we pay a lot of attention to, and I think it really speaks to your introduction. The second type of change is behavioral change. We've certainly seen that incredibly over the past year and a half, that it wasn't just about having the technology, it was also about people's behavior and how that impacted our industry. And also structural change, right? That the fact that the regulators are encouraging people to be all in with fintechs, to really think differently about how our industry delivers products and services. We think that's really important because this intersection of technological change, behavioral change, and structural change is almost always the place where you find the most fruitful opportunity to do things differently, to adopt new ways of doing things. When we think about that at Citi, and I think about what capabilities we need in order to be able to take advantage of this, We've really evolved over the years to doing 4 different things, each of which I think is important as we think about shaping the industry. The first is venture investing, and I'll get a little bit more deeply into each of these 4, but venture investing, so we, for about 10 years now at Citi, have had venture investing teams. These teams meet thousands and thousands of companies each and every year. Not only do my teams invest in companies, but they also really make a point of using all of these meetings and interactions with small startups, with venture capitalists, to understand the trends, what's happening externally outside the 4 walls of the bank, so that we can do a better job of predicting trends and reacting to things that are happening in the world. So we'll get in a moment to a little bit of a deeper dive on how we think about investing. The second thing that we do that I think is really equally important is that we started now about 6 years ago, is we run an internal incubator that we call D10X. D10X is all about discovering exponentially better solutions for our clients. And that's important because entrepreneurs on the outside have great ideas about how to change financial services, and we've seen many fruitful partnerships with those startups. But our employees also know a lot about what our clients need, and they're very inspired to try and meet those clients' needs. And so we created D10X as a way to make sure that within the bank, we could experiment and explore new types of products and services without introducing any incremental risk to the system, which I think is really important. The third thing that we do at Citi is we run a group called the Studio. The Studio is, I really think about as, what would happen if we could simply reimagine financial services. We weren't bound by the way we all think about how banks should operate, but instead, we truly thought about what the world needs and then worked backwards in terms of how a bank could provide those types of services. And last but not least, I also run a productivity team. Many times people say to me, well, that seems very strange. Why would you couple innovation and investing with productivity? But in fact, what we find is that change is not just about new technology. It's not just about sort of bringing new companies in to partner with the bank or having new ideas. It's also about driving change in how our employees can deliver products and services. How do we make sure that we have an environment that makes it seamless and efficient and effective for them to do their jobs? And so we really focus on using those same tools and capabilities around identifying startups, around innovating and validating ideas, and around rethinking banking. And we apply that through productivity to our own work as well. And that whole process of really thinking about what capabilities do we need and how can we bring those to bear within the bank is really synergistic across all 4 of those areas that I just mentioned. I think anyone on this webinar who is deeply involved in innovation knows that it can be really hard to measure. Many of the things that innovators work on are not instantaneous things. They aren't going to deliver in one quarter or the next quarter. But we try and look back and really think about how do we make sure that we're measuring not only the activity that we do, but the impact that we're having on the bank as well. And when I think about that, I mentioned in venture investing, we last year met over 1,300 companies. We've made dozens of new investments. We have an active portfolio of almost 100 companies. And I'll talk a little bit in a moment about some of those companies that we have commercial deals with as well. In addition to that, through D10X, we've not only launched 3 companies outside of Citi, but we've tested new ideas with 4, 5, 6 million clients around the world. And that gives us a really good added way to understand what it is that people outside of financial services are looking for banks to provide. I'll talk in a bit about some of the platforms that we've launched, where you mentioned our mission at Citi around driving growth and economic progress. We're very interested in using data-driven approaches to rethink how we drive that process, and in doing so, we've reached tens of thousands of people in various markets, really trying to make sure that we are helping individuals, businesses, and communities make the best financial decisions that they can make. We've started programs like our Cupid program, which really brings in a new type of talent to banking. And we think, again, it's not just about the technology, it's also about the people and how we ensure that the people that we're bringing into the industry are the types of people that we think we're going to need moving forward. And then finally, as I mentioned when I talked about productivity, we spend a lot of time making sure that our employees get as much benefit from the innovation activity as the innovation group itself, because as with many people probably on this webinar today, the number of people who have an innovation title at any bank might be a small number of people, but the number of people who you want to be well-versed in cybersecurity and AI, who you want to be well-versed in omni-channel marketing is probably much larger than the number of people who happen to have innovation in their title. And so we spend a lot of time working on making sure we communicate the things that we're learning. And all of these activities together have led the processes and the capabilities that I just described to be award-winning processes for Citi. I want to dive a little bit into each of those areas that I mentioned, because I think there are specific things about these areas that may be important and interesting for this audience. So first, when I think about investing, it's probably likely that you would say it's obvious that we invest in fintech, we invest in in commerce and payments. Excuse me one moment, I'm working from home and my 8-year-old needs something. What do you need? Okay, have a great time. See you later. Apologies for that. This is the reality of our life over Zoom. So you would imagine that we invest in fintech, that we invest in commerce and payments, but we've also made a practice over the years to make sure that we're staying at the cutting edge of other areas that are critical for our industry. Cybersecurity would be an example of that, and I understand in some of your prior webinars you've delved deeply into that. AI and machine learning, the same thing, right? These are technologies that can't be the foray of just a small number of people in the organization, but we need to continually be refreshing our knowledge and making sure that we're staying ahead. So, we've for a long time had investors in Tel Aviv, which is the one hotbed of cybersecurity startups around the globe, and that's really helped us to stay ahead of the curve. We spend a lot of time in data analytics and machine learning. I'll talk about some of those companies. We also do things like customer experience, marketing, reg tech, prop tech, right? Places that might be more adjacent to banking, but we think are going to be really critical for banking overall as we go forward. And if you're interested, for folks in the webinar, you can access our active portfolio online, but we've invested in many of the companies that might be household names like Grab and Udon and Plaid, Betterment, DocuSign. So really trying to make sure that we are always looking for companies not only that can help us and help our clients, but that we can help these kind of companies scale. In 2020, we took advantage of the challenge of such a difficult year around the globe to also at Citi launch an impact fund, which is really a double bottom line fund, meaning that we're looking for companies that are going to be successful companies. We can help them grow and achieve their goals, but that also drives societal impact. So we look at environmental, society, ESG type of goals, and also a real focus on helping minority and female founders who are incredibly underrepresented in the venture capital space. I think one thing that's important for what you talked about at the beginning, Mr. Kwok, is that you can't just invest in companies. At least that's not how we approach it. We think it's important to invest, but also to figure out where appropriate, how to partner with these companies. So as an example, we're investors in Grab. We invested a couple years back. We were really interested in the fact that the company was moving not just into ride sharing, but really thinking about building the payments and receivables infrastructure that was going to be necessary to scale that company across Southeast Asia. We then worked with Grab and Citi to work together with them and build a partnership that also includes now a credit card. And I think these are the kinds of things that are important because the drivers for Grab want to be able to access cash. And when we could bring together the capabilities of Grab and the capabilities of Citi, we were able to do something that was even more powerful. Similarly, in India, we're investors in Udaan. Some of your audience might be familiar with this B2B e-commerce platform. And again, not only were we interested in investing, but we've been looking for a long time at a trend that we call embedded trade, really thinking about all of the players in the supply chain, right? All the way down to, the long tail of the supply chain, and how do we work with various players around the world to bring liquidity to that long tail supply chain. As many of your listeners know, there's about a $1.5 trillion gap between the logistics in the world and the financing in the world. And if we can bring those together, then for so many economies, we can help those smaller suppliers access liquidity and grow. And I think that's exactly the kind of thing when you talk about doubling down, with fintechs and really thinking about how we can use some of the global reach and distribution that we have to help communities and individual businesses grow. We think that's a win for everyone. Speaking of wins for everyone, I want to switch gears a little bit and talk about Studio. And I mentioned at the beginning that it's really important to us to reimagine banking, to think about, what would banking look like if we weren't already trained in financial services? And when we thought about growth and economic progress and what that could mean, we thought about a couple of things. I mentioned earlier our Cupid program, which is really focused on bringing new types of talent into financial services. But we also thought about, how do we help communities thrive? Right? Most communities are well aware of what investment they need in a community in order to grow. Depending on the geographic location, communities might need, hurricane preparedness or typhoon preparedness, or a community might need investment in internet broadband in order to bring more people into the digital fold. But many communities don't have a way to publicize their needs to the investors around the world who are looking for places to put capital to work that could help not only drive return, but also drive social good. So at Citi, we created a platform called Citi Builder. It's really focused on, how do you drive geographic-based investment, and how do you help the private capital around the world find public investment in order to help communities grow. Originally, Citi Builder was only in the US, and earlier this year, we internationalized it. We're now working with quite a number of countries, both in Europe, Middle East, and Africa, and we're hopefully moving to Asia sometime soon. But Citi Builder really is an example of the fact that at Citi, we believe that doing things with purpose can't be a sideline to our business. It has to be deeply integrated into our business. And if we can create platforms like Citi Builder that help private dollars flow to communities, we can do a great job of integrating purpose into everything that we do. And I'll just maybe say a few more words about purpose, because I think it's changed a lot in the past 2 years. Where, as I said, it used to be something on the side, but what we see now, not only from our work with clients, but from so much work around the world as people look at what companies do clients trust, what companies do clients want to work with, it's really the companies that have integrated purpose into, as I said, the core value of what they're working on, where they've made sure that they can fuse that together. And we've seen this in our work, not only in investing and in studios, I mentioned, but also in D10X, where a couple of years ago, we spun out a company called Proximity that was very focused on the governance part of ESG, right? The fact that proxy voting is extremely manual, takes a long time, and therefore it's very error prone. And we thought, gee, the governance of companies is incredibly important, and if we could help streamline the governance, then we could help increase the trust between shareholders and companies, and that would be a win for everyone. So there are lots of unique ways that we think at Citi one can integrate purpose into the work that one is doing. And we see that as important a part of innovation as the technological things that come out of innovation as well. So perhaps if it's all right, Mr. Kwok, I'll just pause there and see. I'm sure you have a very active audience, and I'd be more than happy to answer any questions that they have.
Thank you, Vanessa. I'm sure you have raised a lot of interesting thoughts amongst our participants today. Actually, while I was listening, so many issues came through my mind. Your function within Citi is actually very peculiar because you integrate a lot of issues into, strategic thinking into your function. Let me start, cover this one by one. While you're talking about your venture investments and how you're managing these commercial relations, understanding the changes in the world out there, and so on, I had this Kodak example crossing my mind. A lot of MBA courses and other publications talk about Kodak, which is the name of not only a company but of a whole industry, suddenly disappeared because of digital photography. And the story went as that Kodak actually probably was the first company that discovered digital photography, but since it undermined the fundamental business of film industry, so it was buried, and of course the rest was history. When you deal with your venture investments, I wonder whether there are any example that you think, you try to understand so many changes going on out there, you try to understand how you integrate these ideas into the bank's business and purposes, so on and so forth. I wonder if you have you have come across any particular example that you think really, exemplify the kind of, dynamics that big companies today need to think about, in order to avoid a Kodak situation.
It's an excellent question, and one that I think about all the time, because the human brain is sort of conditioned to be in the environment it's in, and it's very difficult to sort of step outside of the environment you're in and think that fundamental assumptions that you rely on could be different. And the Kodak example that you raise is exactly one of those. And of course, when you're running a business, you're constantly thinking each and every day about improving that business. And I remember talking to someone in the media industry, in the newspaper industry, many years ago. And similar to your Kodak example, I said, but how could you have missed the internet? Right? Everyone was talking about it. Everyone was on it. And he said, we didn't miss it. We just didn't realize how important it was and how fundamentally it would change the dynamics of our industry. And I think if there's one thing that keeps me up at night along the vector of change, besides the obvious like cybersecurity threats, et cetera, it's that in banking, we have thousands of years of a reasonably stable set of business models. And that means that we all come to work in financial services every day with a level of understanding and comfort about how those business models operate. And many of the most interesting startups, I think, are not necessarily just the startups that have new features or allow you to open accounts faster online. They're startups that are fundamentally rethinking the business model of financial services. And I think if there's one takeaway from this, I would say, try and make sure that you have a group that's not focused on running the day-to-day of financial services that has the mental freedom and sort of just the open brain space to think about different business models, because many industries have been hit with software is eating the world, right? Everything is now software as a service. Now, in the technology industry, a lot of that happened because there was no choice. It was a competitive imperative to move to a different way of charging for software. We're not quite there yet in banking, but I think that we need to be spending more time and attending to the kinds of opportunities for things like subscription models in banking that have really taken off in other industries. But boy, when you're running a transaction-based business, it can be really hard to sort of wrap your head around what if the business model completely changed. So that's one place that I think we don't want to be a future Kodak moment for our industry.
Well, that's great. But on a more practical level, are you measured by the bank in terms of your results? I mean, financial results of your venture investing? Because that consumes quite a bit of capital for the bank too.
Sure. So people ask me this all the time. It's a great question. And really, I try and lay out a scorecard for myself that is both quantitative and qualitative. I think it's important to measure the quantitative results because at the end of the day, we're a publicly traded company. We need to be caring for the capital that we have and deploying it in a way that best serves our clients and our shareholders. At the same time, we need to also be measuring qualitative results. So yes, I measure both the amount of revenue that my team brings into the bank, as well as the amount of cost savings. So we talked before about different kinds of investments. We also invest in a lot of companies that work on things like fraud prevention. So we look at both the top line revenue that gets created when we do a partnership with a company like a High Radius in order to create new products for our clients, but we also measure the cost saves that we get when we prevent fraud or we make something more efficient in the bank through DocuSign or other processes. And at the same time, I think it's really important to have qualitative measures as well, because at the end of the day, we're a small group in a very large company. And so we want to make sure that we're not only doing things quantitatively in our group, but we are sharing the knowledge that we have, that we're working together with businesses to make sure that that intellectual property, that the things we learn from being on the outside so often are brought into the bank. And so we try and keep an equal measure of quantitative and qualitative measures. And I would say the two go hand in hand. I wouldn't let anyone tell you, oh, it should only be qualitative because we're innovation and we just can't predict whether or not we can hit these quantitative results. Almost always, when those two things come together, you get a better result.
Yeah, that's a very tricky subject to manage for big organizations. Well, you mentioned, changing the subject a little, you mentioned one interesting concept which I think it would be interesting for other people to share. You raised the point that if you want to drive change, you need to come up with the organizational setup, the changes that are necessary within the company so that your employees are mobilized and contribute to drive change in the company. Could you share with us a little bit more how you advise Citi as well as your customers, how to drive that change? And when so many companies these days are talking about driving efficiency, looking at the bottom line, streamlining the organization and whatnot, focus on making more money. How do you drive that organizational and cultural change?
That's a very good question. So thank you for whoever asked that. I think one thing that we started with was the fact that we work in financial services. This is an industry that is not about move fast and break things, right? Our clients depend on us to be predictable, and repeatable, right? We don't want to introduce volatility, right? This is an industry that safety and soundness are paramount. And so we thought about that, and we thought, well, gosh, how are we going to encourage our employees to be open-minded and curious and experiment if really everything that they're being told each and every day is, be careful, don't introduce risk, right? And so I often think about the analogy, financial services is a little bit like medicine. If you're going in for surgery, you don't want your surgeon to walk by you when you're about ready to be wheeled into the operating room and say, oh, it's so nice to see you this morning. This afternoon, I thought I'd try something new. You want your surgeon to say, I've performed this operation thousands of times. I'm going to do it exactly the same way today, and you're going to be just fine this afternoon. And banking is frankly a lot like that. So what did we do to introduce more experimentation, more curiosity into the bank? We had to come up with a way that people could experiment while introducing zero incremental risk into either the institution or our clients. And I mentioned the word earlier, but I just mentioned it in passing, so it's worth going back to. And that's something that we call validation. So when we come up with an idea or we want to do something differently, whether it's an internal process or an external process, before we introduce D10X, if you want to do something new at Citi, like many other companies, you put together a PowerPoint document and you go to your boss and you say, I have this idea and I figured out it's going to make this amount of money or save this amount of money, and it's going to take me 12 months to do it. I need $10 million, but at the end, here's the return. And you had the business case all put together. The problem with that is that in order for anybody to pay attention to you at a big company, it has to be kind of a big business case. And so people tend to, not in an ill-meaning way, but they tend to overstate the certainty of what the benefits of doing their idea will be. And they do that because we're all convinced that we have good ideas. And so in our minds, it's clear that it's going to work. And of course, if it works and it scales, maybe it does get that good. The problem is then at a company, you end up spending an awful lot of time and an awful lot of money on things that rarely do ideas turn out exactly the way you thought they would at the beginning. So instead, what we do at Citi is when someone has an idea, we say, well, that's interesting. Before we go forward with that idea, let's really explore all around that idea, right? Have we stated the client pain point just the right way? Or do we have a sort of an inkling of it, a thought about it, but we kind of start to dig in and we realize we thought it was here, but actually it's over here. And we really test and validate. I mentioned, we validated last year with 5 million clients. Each one of those interactions is figuring out a little bit more, not about the solution that we want to bring, but about what the problem looks like. So we spend a lot of time on the problem. And once we're confident that we really understand the problem and we understand the value that solving that problem will bring to clients, then we go ahead and build the solution. And what that has done is it's enabled us to create a mindset in the company of thinking about the problem and validating the problem, which is actually extremely low risk, really no incremental risk. The biggest risk is that you thought it was a problem for your client and you learned that it wasn't, but that hasn't introduced any systemic risk into the industry. But instead, you've upped the level of confidence that you have that solving that problem is really going to create value. So I think that's probably been the biggest thing that we've done at Citi, is focus on understanding and validating the problem space before getting sign off to go solve something. Because oftentimes when you do that, you come back later and you figure out that you solved something that wasn't really a problem to begin with.
Yeah, thank you. We have actually a lot more to discuss, but unfortunately time is running out. I've seen some questions from the floor, but perhaps I could integrate one of the questions into the point you mentioned earlier. You said that banking tends to be more conservative. We want the surgeon to say that, okay, this is the surgery I'm going to do that I've practiced 1,000 times. I don't want to run new risks. And of course, in banking and financial services, you have also regulatory requirements to meet, so on and so forth. But one subject raised by one of our audience is cryptocurrency and blockchain. Do you think this is going to be, the wonderful idea that the surgeon has never thought about?
So I think it's important in anything. I'll come back to blockchain in a moment. I think in financial services, it's super important to explore and experiment. I just think that one has to figure out ways to do that experimentation that don't create any harm or risk for the institution itself or for the clients of the institution. So as an example, if a photo sharing site goes down for an hour, it might be annoying, but it's not high systemic risk, right? But if a banking system goes down for an hour, that has really catastrophic consequences around the world. So my point was, I think it's very important for us to experiment. We just had to invent a new way of experimenting where we could run those experiments, and we knew that if something in the experiment didn't work, it wasn't going to cause, production system failure at Citi. So going back to the question around blockchain and cryptocurrency and decentralized finance, we've been watching and experimenting in this space since 2013. We think that there's obviously both huge opportunity as well as a lot of open questions. So I don't think there's anyone out there who can give you a definitive answer. I mean, banking, as we all know, is a massive network that includes not only the financial institutions and clients, but central banks. So this is an area of a tremendous amount of activity. I would say anyone who's in a financial institution, if you're not looking at it, I think it's an important thing, both for money movement, but also for, as you start to think about tokenization of other assets and the ability to therefore create, more secure systems, but also different kinds of asset classes, et cetera. So, we probably could do an entire webinar, and I think maybe you have in a prior webinar on that subject alone. But if you couple that with innovation, for sure, people who are running, current systems today, several years ago might have said, well, they might have looked for the things that were wrong with blockchain, the things that were wrong with decentralized finance. And this is pretty typical. I think humans are sort of wired to spot things that are wrong. The interesting thing about innovators and entrepreneurs is they're kind of wired in a different way to try and spot what's right. So if you're someone working in a financial institution and you're interested in innovation, and if you can, when presented with something new like blockchain, first go through, okay, what are all the things that my normal brain is wired to figure out what's wrong with this? Why won't it work? How could it never replace what we have today? And then step back and kind of start the conversation over again and just focus on what's right with this, right? What's interesting about this? How could it be different? I think the most powerful innovation, the most powerful changes in any sector then come from being able to integrate those two things, understanding where the challenges might be, but also understanding where the opportunities might be. And I think in the case of blockchain, we're just getting to the point now where people in financial services are starting to integrate those two things, what's wrong with it and what's right with it. Prior to this point, you had a lot of people in the cryptocurrency world who were just enamored of everything that was great about blockchain. And then you had a lot of people in other sectors who were just thinking about all the problematic pieces. You're now starting to see the integration of those two viewpoints. And so I think that's why you're starting to see an explosion of real experimentation and probably a lot more utilization of this technology in the financial services sector.
Thank you. Thank you very much, Vanessa. particularly at a time when you have to take care of your family and child and so forth.
Apologies.
This is a very interesting session. Unfortunately, we don't have enough time to go through so many important issues that you have raised. And I should also congratulate to you for all the wonderful things you have done over the course of your career so far. And for the benefit of our audience, I think they should know that you were awarded the Female Entrepreneur of the Year by the Stevie Awards. I think you should also get the Thought Leadership Award too. It's great to have you today. Thank you, Vanessa.
Thank you again for the invitation. I really appreciate it. Apologies again for the interruption, but it was lovely speaking to you, and I hope soon we'll be able to do something like this in person.
Yeah, we hope to have you again. Thank you.
Thank you. Have a lovely day.
Okay, bye-bye.